Good evening to all our mentorship traders. This is the 18th of December 2020, Friday evening, and this is our very first mentorship invest meet. Friday evenings going forward, as you know, has now become mentorship invest, which is in line with our new course structure. Now we have a dedicated section for trading and a completely separate dedicated section for investments. In this Friday sessions, we'll be talking about stocks and the sectors from medium to long-term perspective. We will talk about investment vehicles like mutual funds. We'll talk about ETFs. And yes, we will also be talking about insurance, mediclaim, and other aspects of our investment products. I'm sorry. So before we go there, a warm welcome to all our new joinees to the program, to our community. First, let's talk about the index. There's not much to talk about apart from the fact that it's in line with the new James Bond movie that is coming up, Never Say Die or something like that. So we'll talk about the index, few sectors, and then we'll talk about what's in store in our very first mentorship invest meet. So here we are. This is the Nifty weekly chart. The channels have been taken out beautifully. There's no doubt about it. We are in our, I think, what, 1, 2, 3, 4, 5, 6, 7th consecutive positive weekly close. I think the last time you saw anything close to this was here in 2018 top, I believe. So 1, 2, 3, 4, 5, 6, 7, 8, 9. So we had 9 consecutive positive weekly closes in August 2018, and after that we've never seen such consecutive positive weekly gains from the index. Strong uptrend, strong momentum, very, very resilient. On the daily chart, this move that we have from the lows of 30th of October has given us almost close to 20% now. The divergences based on which I was expecting some degree of slowdown from the levels of 13,200, 300 onwards. For the last 500 points have completely gone a waste for me because I was anticipating some degree of slowdown. Nevertheless, the long-term portfolios are performing really well. No problem in that. No more divergences shaping up between the price and momentum on my daily time frame. I have a Fibonacci target close to that 13,900. So it's 13,910, as you can see here. That's one level we can look at. It's very close to the psychological level of 14K. 75-minute time frame of the Nifty shows a couple of things. One, we had this congestion, this consolidation, which was short-lived. It took out with a breakaway gap. This is a typical breakaway gap, and the index is holding well. It's kind of again making that kind of a double topish kind of a structure. If it comes down, 13,600 is going to act as the immediate support. 13,600 down here, 13,400. So 400, 600 is going to act as a short-term level, and on top use 13,900 as the resistance. The trend has been exceptionally strong. There is no doubt about it. Resilient indeed, and we should not question it until and unless we have definite signs of a reversal. But it is the Bank Nifty chart which is a little more interesting than that of the Nifty. Well, this is the Bank Nifty weekly charts. Let's talk about the weekly chart first. Okay. So what we have on the weekly charts, let me just first let's focus only on the prices. What we have over here is 1, 2, 3, 4, 5, 6, 7 consecutive positive weekly closes from the Bank Nifty, and the index is now close to 31,000 on the top, wherein it faces or it tests the lower border of this rising red channel. Now, interesting to see at this level of 31,000, if I take you to the daily chart, you will notice a series of intermediate divergences between price and momentum over here. Now, we've been observing and noticing this for quite some time now, for a few days now, and this generally should ideally lead to some degree of consolidation or correction, which means that either you will see a range bound movement like this, or you can see some degree of correction. If I look at the daily price behavior of the Bank Nifty, if I look at the daily price behavior of the Bank Nifty for the last 7 days, you see the length of the lower shadows. For almost 4 days in the last 7 days, the length of the lower shadows are significant enough, and the length of the body is insignificant compared to the range, which means that for the last 7 trading sessions, the index has essentially not gained anything. It did dip down and it bounced back. It dropped down and bounced back, dropped down and bounced, and that's all that it has done. It has not gained grounds, neither it has given away grounds. Now, this kind of a setup is very, very clear, of course, because it's on Bank Nifty. It's very, very obvious, and it's there that you will find the same thing on the private sector banks. This is the Nifty Private Bank. It is a rising wedge in a rising market. It is a price momentum divergence. These setups generally lead to corrections, which are generally sharp in nature. You would see some consecutive hanging man kind of a pattern shaping up here. And so a breakdown below this, a close below this, can be the sign of some correction, if at all that happens, if at all that comes. In the later section of today's interaction, I will share with you how you can trade this, if at all you want to take a call. There is a way in which we will be able to trade this. But on a closing basis, everyone, please make sure that it closes at least below this rising wedge. This is a clean rising wedge. It's a clean rising market. It's a clean price momentum drop. Now, ideally, it should come down, but many a times you'll see, many a times I've also noticed that it does come down a little bit just to immediately bounce back again. It has happened. These are typical pattern failures also. So nevertheless, I think if the index decides to correct, if the correction comes, then it's the private sector banks which will face the early signs of selling. Another sector that I would like to bring your notice to, which is topping out beautifully, or at least showing signs of topping out beautifully. One is the metal. If you take a look at the Nifty Metal Index, you will also find beautiful intermediate price momentum divergences shaping up. Not necessarily a sign of correction, but definitely a sign of consolidation. So metal stocks, I would suggest to stay away going long, wait for a price dip to get into this. It had an exceptional run. Now it has entered this gray zone. It's actually teasing with this gray zone that we had marked a few weeks back. It's at the 61.8 Fibonacci retracement also. So it's got decent enough technical reasons at this level of the CNX metal. It's got decent enough technical rationale to not go any further, but consolidate or correct. We'll see whether that happens or not if the party continues. Anything can happen, but technically when we read these charts, the odds are in the favor of a consolidation and or correction. There's one more index which will be very interesting to keep a close watch, which will be the which is the CNX IT. Now CNX IT on the weekly time frame too has this nice divergence, and on the downside you'll see that this last leg of the movement in the CNX IT from 20,500 to 23,500, don't see any higher moves on the relative strength. This is the relative strength compared to the Nifty. Though it is definitely relatively very strong, but it's cooling off. So again, this chart, the weekly charts of CNX IT, also has some decent amount of rationale for a slowdown. The daily chart, however, does not reflect that very clearly, apart from the fact that we had a beautiful symmetrical triangle breakout. You've got a shooting star up here. Today was a nice day for IT stocks. After we had some MNC companies coming out with some good margins. and some good positive outlook for the future business. So these two sectors would be very, very interesting. Apart from this, most of them, if you look at PSU banks, which is SBI heavy, is a huge underperformer. Doesn't make sense. Only one stock that you can focus on would be State Bank of India. And the daily chart is in an uptrend, so one can look to buy on a dip. Financial services are also very, very, I would say, stretched. We have got a bearish Harami pattern on the last 2 days, if you really see here, added with an hanging man. So again, time and again, I do notice that, yes, these charts are showing some signs. It's not that this is the first time they're showing signs. They've shown signs like a bearish engulfing before, or like a dark cloud cover before, and none of these patterns worked. None of them worked. But unlike this time, unlike in this zone, what you will find in this move of the market, at least for the CNX Finance, is a drop in the momentum of relative strength. In this zone, the relative strength was gaining. The momentum was in favor of relative strength. Over here, the relative strength is dropping. So this would be interesting to see whether this plays out or not. But trust me, it will come off, will come down when you will expect the least. Similar kind of divergences, intermediate in nature, we can find in energy. This is Reliance heavy. But overall, I think it's the Bank Nifty and private sector banks which you should keep a close watch, and then the metals, if you look to go short in the derivatives market, if at all. But apart from that, strong markets, strong trend, high momentum. The Bank Nifty clearly showed this with the length of lower shadows of the candles. So tough times to take contrarian trades. You need to be really brave, and I would rather go with those charts which have distinct signs of weakness, like I shared with you, the Bank Nifty, the IT. Both are exceptionally strong. Both are exceptionally relatively stronger sectors. So you need to be, as I said, for a contrarian trader, you need to be really careful, and definitely place your stops, or else you'll get run away with this kind of trend, right? 13,900 to keep in mind for the Nifty, and 13,600, 400 on the downside for the same index. All right, now let's move ahead and talk about our very first mentorship invest session.